Now speaking, Marilyn Mora, Head of Investor Relations. Cisco's third quarter fiscal 2023 quarterly earnings conference call featured Marilyn Mora, Head of Investor Relations, and Chuck Robbins, Chair and CEO, as well as Scott Herren, CFO. Investors can find income statements, full GAAP to non-GAAP reconciliation information, balance sheet, cash flow statements, and other financial information on Cisco's website. Comparisons during the call will be made year over year and will discuss product results in terms of revenue, and geographic and customer results in terms of product orders. Forward-looking statements, including fourth quarter and full year guidance for fiscal 2023, were discussed and are subject to risks and. Now speaking, Chuck Robbins, Chairman and Chief Executive Officer. Cisco delivered their strongest ever quarterly performance in Q3 with record revenue, non-GAAP income, non-GAAP EPS, and operating cash flow. Subscription and software revenues grew by double digits. Based on the strong results, they raised their fiscal 2023 outlook for revenue and earnings per share. In Q3, they achieved 18% growth in software revenues and had $32 billion in remaining performance obligations. They are focused on increasing subscriptions and recurring revenue, as well as expanding their security portfolio and leveraging generative AI capabilities. They also reported a 1 point below the historical range in sequential orders, as well as well below historical cancellation rates. Lastly, they were ranked number 1 in the US and 14 other countries on Fortune magazine's 100 Best Companies to Work For. Now speaking, Scott Herren, Chief Financial Officer. We delivered a record quarter that exceeded both our top and bottom line expectations, with total revenue of $14.6 billion, up 14% year-on-year. Non-GAAP net income was $4.1 billion and non-GAAP earnings per share was $1, up 15%. We saw double-digit growth in product revenue, with Secure Agile Networks up 29%, switching up double digits, enterprise routing up driven by Catalyst 8000 series routers, SD-WAN and IoT routing, wireless up due to Wi-Fi 6 products and Meraki, Internet for the Future up 5%, collaboration down 13% and end-to-end security up 2%. Software revenue was up 18%, 82% of which was subscription-based. Total short-term RPO grew to $16.9 billion. Total non-GAAP gross margin came in at 65.2%, exceeding the guidance range, but down 10 basis points year-on-year. Non-GAAP operating margin was 33.9%, down 80 basis points year-on-year. Operating cash flow was $5.2 billion, up 43% year-on-year. We returned $2.9 billion to shareholders via dividends and share repurchases. Guidance for Q4 is revenue growth of 14 to 16%, non-GAAP EPS of $1.05 $1.07, and for FY 23 revenue growth of 10 to 10.5% and non-GAAP EPS of $3.80 $3.82. Now speaking, Marilyn Mora, Head of Investor Relations. I, Scott, suggested to Michelle that we set up a queue of questions. J.P. Morgan Chase & Company analyst Sammy K. Chatterjee inquired, have orders been sequentially lower than seasonality on a quarter-to-quarter basis and what is the expected order growth for next year? Chuck Robbins replied, demand is being affected by 3 factors: customers digesting orders, lead times decreased 40% in last 2 quarters and macro conditions. Sequentials are currently operating at the low end of our historical range or slightly below, but we expect them to be in line for Q4. We still believe we can deliver positive growth in FY 24, as originally forecasted with 5 to 7% top-line growth and 5 to 7% EPS growth on a CAGR basis. J.P. Morgan Chase & Company analyst Sammy K. Chatterjee inquired, have there been any changes to the plan discussed at Analyst Day regarding limited operating leverage and growing earnings in line with revenue? Specifically, have you become more disciplined in pulling back on expenses as a way to grow earnings faster than revenue? Chuck Robbins replied, over the last 2 years, our EPS has grown faster than revenue. We anticipate that Q4 and beyond will show an even greater growth rate due to our gross margin expansion and expense management initiatives. This is what investors have been asking for, and we believe it is achievable. Scott Herren replied, in the past 2 years, I have seen us invest in growth while also growing our bottom line faster than our top line. For fiscal years 22 and 23, we have been prudent in our guidance and plan to continue this in 2024. Raymond James analyst Simon Leopold inquired, have you been able to explain the strategy, thought process, and rationale for implementing the Cisco Capital Business Acceleration Program which was announced at the beginning of May? Chuck Robbins replied, we have provided our customers with technology to help them advance their strategies due to an increase in interest rates up to 5%. We used our balance sheet to finance this, and it is not a complicated process. Chuck Robbins replied, I have not seen any evidence that suggests increased profitability or a positive long-term impact. UBS analyst David Vogt inquired, can you provide more information about the macroeconomic conditions from March to April and how they have impacted your three-year plan, in terms of expected revenue growth of 2 to 3% and EPS growth of 5%? Chuck Robbins replied, I apologize to David for not hearing the numerical data he provided. UBS analyst David Vogt inquired, do you agree that with your 5% to 7% revenue growth target over 3 years, next year's revenue growth will be in the 2% to 3% range and EPS growth will be in the 5% to 6% range? Chuck Robbins replied, in Q1, our linearity was favorable compared to historical ranges and April was in line with the first 2 months. We didn't see a deterioration from the beginning of the quarter to the end and sequentials continue to play out consistently as expected. Scott Heron replied, I believe I am in the right ballpark with my math. For fiscal year 2024, it is too early to provide an exact number since it is only our Q3 call. However, our guide for fiscal year 2023 predicts 10.2% growth. This will be the first time in 9 years that we have seen double-digit revenue growth. Jefferies analyst George Notter inquired, have the factors driving growth this year been price increases, backlog consumption or something else? How much of the growth is attributed to each of these? Chuck Robbins replied, end-user demand is the biggest factor driving growth this year, with help from engineering and supply chain teams to free up supply issues. This has allowed us to work through backlog, though we will still end the year with double our normal backlog. Price has been a positive for us, providing about a point of benefit when we publish Q results. Morgan Stanley analyst Meta Marshall inquired, have you noticed any trends in enterprise, commercial and service provider customers? Are there any changes that Cisco has seen in customer outcomes from cloud optimization efforts and long-term architectures? Chuck Robbins replied, I summarized that I am seeing a 41% year-over-year decline coming from the service provider space, which is less than 20% of our total revenue. We are also seeing extended sales cycles and more signatures required for transactions. Every customer is focused on re-architecting for multi-cloud world, hybrid work, application strategy, cyber footprint, and sustainability. The market opportunity for AI infrastructure is estimated to be $8.5 billion by 2027 with a 40% CAGR. We are better positioned than anyone else in the networking perspective for this AI infrastructure. Credit Suisse analyst Sami Badri inquired, have there been any delays or disruptions in shipments or deliveries due to changes with cloud providers or hyperscalers in the quarter? Chuck Robbins replied, we have been fulfilling all requests and have experienced delays on certain projects due to focus on AI infrastructure. We have seen lots of design wins and believe we will continue to gain market share in this area. Credit Suisse analyst Sami Badri inquired, I understand that I can expect modest growth in gross margins in 2024 and EPS growth outpacing this. Can you provide an idea of what the trajectory of gross margin expansion might look like? Chuck Robbins replied, we have seen significant progress on gross margin through the year with a 240 basis point sequential increase in product gross margin. We expect to reach our lapping point of the price increases soon, leading to potentially further gains sequentially, but an average increase for the full year. Our glide path goal for fiscal 24 remains the same. Deutsche Bank analyst Matt Nignam inquired, have you embedded any macro assumptions into your preliminary outlook for modest growth in fiscal year 2024? Additionally, what is driving the softness and decelerating growth of 2% this past quarter and what can be expected from additional backlog releases going forward? Scott Heron replied, I am starting fiscal 24 with a backlog that is roughly twice the normal amount due to continuing supply constraints. These should improve and normalize around mid-year. The absorption factor should also be worked out by mid-year of next year. Currently there is $32 billion RPO, $17 billion current, and $24 billion ARR, which provides a great renewal opportunity for next year. Chuck Robbins replied, I have hired a new leadership team who are doing an exceptional job. Recently, we announced our XDR platform at RSA, and at Cisco Live in a couple of weeks we will make more announcements around new innovation. Over the next few months, security will be accelerating into a growth driver for us. Goldman Sachs analyst Michael Ng inquired, I'd like to know about inventory levels and purchase commitments going forward. Do you have any information to share? Chuck Robbins replied, I have worked with my team to balance our inventory and purchase commitments over the last 3 quarters, resulting in a reduction of $3 billion. We are dedicated to meeting customer demands while minimizing inventory risk. Goldman Sachs analyst Michael Ng inquired, "Can you provide more information about your expectation to return to a normal seasonality in sequential orders next quarter? Is the absorption of early product shipments that impacted sequentials this quarter largely done by next quarter? Is it just the ease of your comps?" Chuck Robbins replied, "I said that Q4 will likely have normal sequentials when compared to Q3, meaning they will be within the historical range. We expect digestion and lead time issues to be resolved by mid-FY 2021, with normalized ordering patterns and backlog returning in the second half of FY 2024. Marilyn Mora replied, "I asked one final question and received an answer in the allotted time." Evercore IC analyst Amit Daryanani inquired, "Have you seen gains on the AI infrastructure side, and if so, what are they? Are these new applications or just displacements of existing ones?" Chuck Robbins replied, "We have been winning and displacing existing architectures for the past few years, resulting in new franchises built on AI networks. InfiniBand is currently the most widely used technology, but web scalers are transitioning to Ethernet and our scheduled fabric, which runs more effectively and efficiently. We believe we are leading in this space and it is providing a large opportunity for us over the next 5 to 7 years." Evercore IC analyst Amit Daryanani inquired, "Do you think the 22% decline in orders is a trough, or will the declines continue and ease up over the coming quarters?" Chuck Robbins replied, "I predicted 6 quarters ago that revenue would exceed bookings and that is playing out as expected. Despite macro uncertainty, we are still looking to spot a shift in momentum from one quarter to the next, which we have done for 20 years. We are confident our sales teams have the visibility to show positive growth by FY 24. Scott Heron replied, "Amit's analysis shows that approximately 40 to 50% of the revenue for fiscal 24 is already accounted for in current RPO, backlog and renewal opportunities sitting in ARR. This takes pressure off of macro as it puts the company in a strong position for next year." Chuck Robbins replied, "Scott and I discussed that 8 to 10 years ago, orders accounted for up to 75% of our quarterly revenue. However, this is no longer the case, which will help us in our efforts to plan for FY 24. Chuck Robbins replied, "I am proud of our team's execution leading to record results this quarter, including meaningful market share gains in campus switching, SD branch routing, wireless LAN, and SP routing. We expect double-digit revenue growth and faster earnings per share growth in FY 24 and are committed to delivering on our commitments." Marilyn Mora replied, "I will be hosting a quarterly earnings conference call on Wednesday, August 16, 2023 at 1:30 p.m. Pacific Time, 4:30 p.m. Eastern Time. If you have any questions relating to the earnings, please contact Cisco's Investor Relations Department. Thank you for joining the call."